like look up eBay. Look up eBay's one that did not have a great earnings. Uh,
Yeah, they did okay, but relative to everybody else, I mean, they're up 50%, but they,
no, look this week, like after their earnings, what happened?
oh, dropped. Yeah, they went from 62 to 55. And that's the
Yeah,
correlation you have to consider. Yeah.
so when we mentioned like Facebook, oh yay, Facebook went up 5%, and oh Google went up 5%, and but when you really look outside of these other companies are not doing as hot. You know, like there's when you pull back the curtains, like we keep saying, is there's a lot of companies that are gonna feel the pain of this year,
Hmm.
of the more macro things that are happening, uh,
So
and
where do you
so
think the
we're gonna start seeing
pullbacks
it.
are going to occur? Where are we thinking in the next year? I would anticipate like Zoom, right? Maybe not doing as good. They had a nice
Uh,
uptick in the last 365 days. Pull them up. Oh, we can already see it. So yeah, they peaked in October. That's when everybody realized we're going to be in this
uh,
for a while. So started May 1st at 138, and then worked their way
mm.
back down to 319.
So
Right.
these are the companies that are still overvalued. So when I mentioned like
Well, the price to
these,
earnings ratio, look at this, 141.
hmm yeah,
Like, what?
who's buying that?
What?
Even if you double your revenue this year, like your price to earning ratio is still going to be like in the 90s, you know, like even with substantial year over year growth,
Right? Price to
your
earnings
PE
on
ratio is still going to
Facebook
be
is
ridiculous.
27, right? I
Hmm.
mean, I have to
And
pull
that's
up
what I would say is like, as the market, you know, some of this people start seeing the froth as a word you could use. And they're like, oh wait, there's a lot of
good
things
word.
that are overvalued. Find the companies in the same tech, the same sectors, and look at their PE ratios.
Yeah,
And that's where
30
you can
for
figure out where to
Alphabet.
buy. Like look at Nokia. I wonder what Nokia's
Mm,
PE ratio is. They're probably like 11 or 12 or something. Like they're
oh,
probably a
they're
really
not
great
even
buy
listed
on
right now. Yeah,
fundamentals.
not on this chart. I'll pull them up.
Yeah, I think when I tried to look too, I didn't see a PE ratio there.
Yeah, but they do have almost 7 billion cash on hand, which is a little over 17%, 17 and a half year over year. So it's not a bad.
So there's areas in the market that you're gonna want to find, but there's a lot of these popular names that came up last year, like Zoom, like Teladoc, TDOC, like these things that had crazy valuations, even though their revenue was nowhere close to being at that valuation. These are the froth in the market, and they've pulled back, which is a good sign for the overall health of the
Right.
market. But they're still overvalued at where they're at today. Like
Wow.
there's just so much froth.
I mean, yeah. PLTR. I mean, we've talked about that a couple times now. They're up quite a bit. They're up 142%.
Hmm. Yeah, they were SPAC.
Mm-hmm. Mm-hmm.
They're at $10.
They don't even have a PE.
Mm. Yeah, their valuation's ridiculous. It's like 30 something billion, right?
Mm-hmm. Their
What's
market
their
cap's
market cap
42.
at? Yeah, 42 billion, which is ridiculous. I think they bring in like
So it's
20
interesting because
million
I like to look at the
a year or something.
historic charts, right? Like their year,
Hmm.
52 weeks is 8.9 or $8.90 as a low and a
Hmm.
$45 high, and they're actually kind of in the middle of that right now at
Hmm.
2304. So you start to see things kind of shake out after the dust has settled and people realize, this similar with IPOs, right? IPOs open high, within a
Yep.
couple days they come back to normal, back to earth, if you will.
Yep.
So it's pretty